On that note, we'd love to bring in our next guest. She is the CEO of Soho China, the largest property developer in Beijing's Central Business District, Zhang Xin. Thank you very much for joining us on Bloomberg Television today. So, things are getting better in the global economy. Inflation is coming down in China, albeit growth is slowing as well in China. From the property perspective, are you seeing any signs that the authorities could be easing on the property measures? Premier Wen Jiabao says, no way.
Well, I think if I give you a number, you will see where we are. In the last quarter of 2011, which is a few months ago, that the office rent in Beijing and Shanghai has gone up 50%. So that's how much it has affected the economy. Earlier, a few years ago, when people talk about how these ghost towns were built, empty buildings are standing there, no longer the case. They
filled them up.
They filled them up. China's economy, China's growth filled it up. At least in Beijing and Shanghai, that's where I see and I operate.
But Jim Chanos, the hedge fund manager, always talks about these highways to nowhere, bridges to nowhere, and that there's going to be an impending crash.
I think that this is why the Premier Wen says that on the residential development, on the residential real estate market, there's still a very strong control, meaning that if you own one home, you simply cannot buy your second home. And I think if you drive out, you go away from Beijing and Shanghai city centers. We're not talking about office anymore. We're talking about residentials. And I hear that, there's just many more satellite cities being built and yet to be digested by the market.
We have to split the market up between the office and residential. And in our past conversations, you've moved really in this tightened environment away from residential and more into commercial. But can those commercial rents continue? You said about 50%. Other numbers I've seen last year, 75% in office space rents. Can that continue?
You see, why would the rent go up so much? It's because supply is not there, right? It won't go up as much if the supply is there. So then you have to ask, why is supply not there? Because the credit is still tight. So the money required to build the buildings is still not quite there yet.
What are you doing on the M&A front? I know your husband, Pan Shi talked about staking with Beijing, Shanghai, some of the other developers having cash problems. You talked about credit constrictions. What are you going to do this year? Is this going to be a year?
This, for us, has been a great year because for those who have cash, like we have been very conservative in managing our balance sheet, this is a great year to buy land, by building, because nearly every developer is cash tight. And the government is still very, very tight on the credit. We do all expect that later in the year that the credit will be eased. It has to be eased in order to catch the target GDP growth. Where does the money come from? It needs to come from somewhere.
What's going to be that trigger for the easing? Are you talking about real estate measures?
I'm talking about generally the credit easing for the economy, not necessarily to the real estate. As Premier Wen already said, that on the residential, the measure is still in place, the restriction to buy is still in place. But it doesn't mean that credit won't be eased, because the general economy needs the money. Now that inflation is very much under control, there's room for credit to be relaxed, to be eased.
What's going to be the trigger point? If we see first quarter GDP below a certain point?
I think the trigger point would be the slowdown of the economy, the slowdown of the export, the slowdown of the consumption. All those will be the trigger point.
All right. Zhang Xin, always a pleasure to talk to you.